Lango has acquired 4 shopping malls in West Africa, Lagos, Nigeria, and Accra, Ghana. This at a price tag of over $200 million US. Company CEO Thomas Reilly joins us to discuss the merits of the deal driven by the attractiveness of the market. Thomas, a pleasure. Good afternoon.
Hi, Dolu. Thanks for having me.
Brilliant, Thomas. We actually don't often hear about the retail property sector on the rest of the African continent. It looks like a lot of the news and even the activity is concentrated here in South Africa. Let's talk about what is happening out there in West Africa specifically.
So the West African market from a retail perspective and moreover from a real estate perspective generally is in very short supply. So if one looks at the quality, the amount of quality real estate in the rest of the continent, you just don't find the same amount of accommodation of a suitable quality as you would find in South Africa. So I think that's part and parcel of the reason for that. But the reality is that these economies are growing. They've been growing a lot quicker than the markets in South Africa, as an example. We are seeing that levels of online shopping, as an example, have not quite reached what you would see in South Africa, and certainly not near what you would see in Europe or the States. So the reality is that infrastructure in these markets is a little bit more challenging, and as a result of a lack of, let's say, good road infrastructure, good logistics systems, that online shopping and so on is unlikely to come through for the foreseeable future in the medium term, let's say the next 10 years. And as a result, the more formalized retail markets remain, very solid and very strong.
With that said, of course, you've gone on to find, green shoots in this environment. Let's talk about what might be classified as a green shoot at this time, Thomas.
So, I mean, if one looks at, opportunities generally across the continent, I think it's safe to say that, no one has been immune from the high levels of interest rates. So, markets generally and globally, for that matter, in terms of real estate, have really been under pressure. We as a business were quite fortunate in fixing our debt. We have approximately $300 million of debt on the balance sheet. We fixed that debt with LIBOR literally at zero. So that was at the end of 2021. So from that perspective, it's allowed us the opportunity to lever our balance sheet and to grow potentially a bit more accretively than certain others. But I think, the reality is markets are challenging. There's no getting away from that. So in terms of green shoots, I think the opportunities that we're seeing are really second round opportunities where we can effectively look at acquisitions. So it's acquisition-led growth that we're pursuing right now, and acquiring at a deep discount. So, where we can acquire assets effectively far cheaper than one can build them or replace them, we see that as a good point and a good time to essentially try and enter the market. So we've been holding off for a long time. This is very considered growth, very strategic, and we feel that the pricing point it equates to a green shoot, as you call it.
I'm also keen to then speak about, the way forward here as we look at the markets. And of course, as you're saying, it's a great time in the cycle right now to be, entering with these investments. Thomas, what are we hoping that we can gain from there in terms of maybe foot traffic and maybe even a return on the investment, and maybe even looking at the horizon or the term that we're expecting that return to come through?
Look, we're expecting to see a return in the very short term. Okay. So, if we look at the pricing point that we've acquired these latest assets in, these are going to yield close on a distribution yield for us of close on 12% in dollars. I don't think there are too many investments that one will find in hard currency at this point in time that's going to yield that. So having a cash yield of that. So, I think the reality is that, as I mentioned earlier, the amount of quality real estate in these markets is few and far between. You cannot build these assets, for the price that we're acquiring them. And the reality is what that means is that you're not going to see much more development over the next few years. So the existing assets that are there are going to be more sought after. You're going to see increased levels of foot traffic in our view. The foot traffic is already high. The levels of spend are already high. If one looks at the ShopRite stores as an example, in the markets that we operate in, they are some of the better trading ShopRite stores across the continent. So, obviously looking at we're very close to Growth Point clearly as one of our anchor shareholders. And, if one compares the levels of trading density and so on that we're seeing in our assets, they are very competitive.
And let's talk about, tenants. You've spoken about the quality of tenants there. Any work in developing tenants? I see sometimes with a retail property, you do have to kind of handhold it a little bit until tenants are at a certain point and can become a really reliable and almost annuity income in the future, Thomas.
Yeah, that's correct. I mean, first of all, in terms of our tenant base, I mean, historically, it has been the large South African anchors that have populated these malls, but more and more what we're seeing is that the local markets from a retail perspective are picking up, and there has been an element of hand-holding. We have certain areas in some of our assets where we almost incubate to a large extent certain small tenants, perhaps in the fashion industry or something similar, and really grow them and nurture them until they are able to stand on their own feet. And then you're right, they do become longer term tenants, of the business. But equally, we are seeing some of the larger tenants from Europe and the Middle East coming into our assets. So if anything, we're seeing potentially more promise coming out of Europe and the Middle East in terms of future tenant base, as opposed to South Africa.
Very interesting indeed. I know that Lango has intentions of listing on the London Stock Exchange at some point. Let's talk about those plans and maybe where you'd like to build the portfolio up to before you get to that level.
Yeah, so the business has grown considerably, from something that we started from nothing back in 2018. We now have almost $1 billion of assets under management on the balance sheet. So, around about 875 million at this point in time. We are pursuing further acquisition-led growth as well. So there are other opportunities that we're looking at. And the intention is really to build up a sufficient amount of scale ahead of an IPO. So we will be embarking on a process. We have, in fact, already been through an IPO readiness exercise to list on the LSE. We are in conversation with the LSE. So that is something that we have targeted to happen before March of 2026. So we've got literally another 18 months or so to go before that process, essentially is concluded.
Thomas, if you don't mind, actually, I'd like to ask why the LSE, not the JSE here? I'm keen just to get that understanding. Yeah.
I think it's a question of trying to play in deeper pools of capital. So, if we look at the availability of capital in those markets, it's slightly deeper than it is in South Africa. And not to negate South Africa, though. The reality is we have a large contingent of our shareholder base that is South African. They've been a huge support to our business, and we don't see that changing. There's a strong chance that we may consider a secondary inward listing on the JSE. So in other words, we'll be listed on both the LSE and the JSE. And I think that'll give an opportunity for investors in South Africa who want to capitalize on the growth of the rest of Africa, but have it in a hard currency form. Obviously, we're a dollar-denominated company. That opportunity would be there to access the stock through the JSE. Well,
we look forward to hearing all about the developments. Thomas, thank you for your time this afternoon. It's been a pleasure chatting. That was Thomas Reilly, he's CEO of Lango Real Estate.